Okay. Let's get to it. I am super excited to talk to you guys today. This is Dylan, host of the show and founder of Killer Whale Ventures. Let me just get some contingencies out of the way before we get started here. This show is completely sponsored by us. Find everything you need down in the description below. Access to our intelligence platform. We're running a 25% off code with the code START25 forever. So you can use that as many times as you want, as many accounts as you want to hook up, and as many AI allocations as you need to control your portfolio in the way that you see fit. All right, done with that. Let's talk about human psychology today, friends. Human psychology. There's a lot of really cool things happening in the market right now, and I just have to share it with you. This is one of those days I wish I would have started this YouTube process and I had 1 million followers, started like 3 years ago and have 1 million followers. We do very well-respected technical analysis in this channel on a long-term basis, on a short-term basis, on a mid-term basis, position building, dollar cost averaging, swing trading, short-term, mid-term, long-term, whatever you guys want to know. There's a lot to learn here in this community, and we are willing to accept requests about information that you need or don't understand, right? Let me tell you a few things about what's going on today. Today is one of those days that we wait for very patiently as traders and investors. And what I mean by that is there are very few times and very small windows of time where you can identify low-risk trade setups. Well, we've done that over the last few weeks getting this channel off the ground, and it's been a little bit boring until today. And it all is based off of human psychology. All of us traders are looking at the same charts, right? Just because I'm looking at something and drawing a pattern on a chart, that means millions of other people have access and information. They have the same information I have. But what we're going to talk today about is the whale mentality, the high net worth individual mentality over the retail investor mentality. Okay? Because I see a lot in my business where we have people aping in at 126,000 looking to use AI tools and products to make their life better, but they missed the entirety of the analysis that led up to 126,000. So without further ado, let's just jump into the TA, and I hope you will see why I am so passionate about technical analysis and why I want all of you to learn with me. Okay? So this might be the best show that we've done so far, but it will not be the best show that we've ever had. It's just a very unique opportunity to look at financial markets in the terms of why high-end investors invest the way that they do. All right, let's jump in here. Bitcoin. So as we've been discussing, still fully in the bullish control zone, this green cloud right here. This is where we need to be in order to see action to the upside. If we go into bearish control, we will be singing very different tune compared to being in bullish control. We got very close to crossing our line in the sand here, but as you can see, it did not cross. Now, something that is about to cross, in my opinion, we had this turn on the moving averages back on October 18th, right? We had that big capitulation move market-wide, and then the market officially turned bearish for the short term on that like 18th to 20 range, right? Ever since October 18th to 20th, we've been in this really long bearish consolidative pattern. And now what we're seeing is, as we were talking about the last few days, this moving average is starting to not only flatten out, but it's turned to the upside officially, right? This is the 20 moving average. This is the 10 moving average. They've both curled, and now they're starting to point to the upside. What we've also done is put in a low, a higher low, and a higher low. Even we could count this as a higher low. So we've put in 3 consecutive higher lows and a full official low. Cathie Wood, very smart investor, CEO of ARK Invest, called the bottom right here, and I think she's absolutely right. I've been saying that for weeks, right? And not to drone on too much longer about this, but the moving averages are pointing to the upside now. That is a very good thing, and that is a sign that we might be having a momentum shift market-wide because Bitcoin is the market oscillator. Everything in the crypto space follows Bitcoin for the most part. You have your outliers like BNB that absolutely pumped to all-time high while this capitulation move was going on. Different story, right? But what we're talking about today is the high net worth individual mentality when it comes to the crypto markets specifically. So moving averages started turning, pointing to the upside. Let's look at this on a purely technical standpoint. And I gotta say, I have never been so excited to see a move disrespected, a technical analysis move disrespected so that everything else can thrive. One move being disrespected and the entire market has now shifted directions from bearish to bullish, in my opinion, okay? But let's talk about this. So how often do bear pole, bear flags play out on Bitcoin specifically? Mind you, we're looking at the 12-hour chart. So this is a long-term time frame. So I would say on Bitcoin, because the nature of Bitcoin has been go up for the last 15 years, right? So I would say there are a lot of opportunities like this that have been disrespected in the past. But let me tell you why this one's different. As you can see, we put in an absolutely immaculate bear pole, bear flag. It got 60 to 70% of the way through the pattern, and then we broke out to the downside. We had our targets measured. I said, I do not want to go past target 3. Target 3 would have put us in full bearish control. And this is how the market, this is how the composite operators, the market makers think, right? They want a lower price to accumulate an asset that appreciates in value. So if they have a big enough wallet size, they can manipulate the price to the level that they want, right? Now, they do not want the market to go fully bearish. That is bad. And we've seen it takes 2-3 years to come out of a bearish stint. So these composite operators have said, okay, we will put in the orders that it takes to get to lower prices, but we're not going to go into bearish control. And that's exactly what we've seen. If I just zoom out again and just show you how close it came, this, if a candle closed below here, this would have put us into bearish control. They brought it right down to the line of bearish control, okay? Now, if we look at it on a technical standpoint, I've never been so happy in my life to see a pattern disrespected like this. So we achieved target number 1. By no means was I shorting this. I do not short Bitcoin, but I do look at the technical analysis. So even if you had shorted this with a 1.56 risk to reward ratio, you would have made money. You could have shorted it right here to target number 1, which I'm going to show you in a different respect here, but you could have shorted it to target number 1, taken 50% of the trade off the table, and came right back to stop loss, and you could have made money on this short. That's not what we're looking to do here. We're looking to measure the targets and say, hey, if things get really bad, we could go all the way down to 66,000, so we can be prepared for this. Okay. Again, I've never been so excited to see a pattern disrespected and just go to target 1 and turn around, right? But let's go ahead and move on to the greater crypto space. Bitcoin is having a change of opinion. It's changed its opinion from bullish to bearish, from bearish to bullish. In my opinion, that has officially begun today, maybe yesterday when we entered these plays. So let's go ahead and look at Ethereum. Now, Bitcoin is the market oscillator. However, Ethereum is the oscillator for the altcoins. What I mean by that is it is the second largest token, and it's very volatile, but the altcoin space typically tends to respect what Ethereum has going on. Ethereum was very, very bearish, just like the rest of the market, in a descending channel. It was trapped within this descending channel. We did not take trades, a technical analysis style of trade, I mean, because we're always accumulating, but on a technical analysis trade basis. We did not trade anywhere in this area, right? Do you see me putting targets on the chart anywhere besides where I put them on the chart? No, and let me tell you why. High net worth individuals, market, composite operators, and market makers are very aware of the type of patterns that lead to bullish activity and very aware of the type of patterns that lead to bearish activity. So what has happened exactly on Ethereum? Ethereum had a full consolidated move. Let's see, from, just so we can measure it, new all-time high to the very bottom, 46% loss. That is not out of the realm of what happens often with Ethereum. So let me just scooch back here and just measure what happened through the course of 2025. We had a capitulation move at the beginning of 2025 that led us down 65%, in which case we participated at the lowest possible risk area of entry that we could. Now, to rewind what's happened just in the course of 2025 going into 2026, we're seeing something similar. But let me just show you. We did not put targets out here during this this descending broadening formation in the process of its formation. We did not have the conviction that we needed to take a low risk entry on a trade. So where did we decide to take our last long position on Ethereum? All the way down at the very bottom of the move, because what happened? We had confirmation that the trend was changing, right? When retail investors get excited is when things are all the way at the top, new all-time highs. Oh my God, it's the most exciting time in crypto. But where high net worth individuals and traders and technical analysts who understand human psychology get excited is right in areas like we've seen in the past, areas of low risk, high reward. What are we seeing right now? We have been in a consolidated move that was 50%. We have a low risk area where we are going to take a shot at this thing, right? We go ahead and enter back over here, December 7th, 8th, something like that. And that gave us the conviction that we needed to take a shot of a trade with a 2-to-1 risk to reward ratio. This all might sound like rocket science, but it's really not. All we've done is identified an area of opportunity. And I'm going to show you on XRP, Solana, Tron, this opportunity spans far and wide because all of these assets react together. And there's high net worth individuals, composite operators, and market makers reading these charts the way that I have studied in a traditional technical analysis fashion. So let me show you. We entered here, right? Immediately went up to target number 1. This trade had a 2-to-1 risk to reward ratio. So no matter what, we took 50% of our trade off the table. And even if we went back down to stop loss, we would have made money on this play. We have our stop loss measured below the previous swing low. Because what are we trying to accomplish here? We're trying to accomplish higher lows in the trend. We have now officially put 3 areas, a low, a higher low, and a higher low, into existence on the charts. And everybody in the world has the opportunity to look at this. So, that being said, Ethereum has also changed its sentiment. We are now going to the upside and making higher lows instead of making lower highs. See? Lower high, lower high, lower high. Now we've gone higher low, higher low, higher low. Everybody who's looking at an Ethereum chart sees this. And people who are trained in technical analysis see the even finer details of what I'm talking about right here. We had a breakout and a retest. This is where we decided to enter our trade. The window of opportunity here, if you were not looking at this every single day like I am, or at least listening to an update like I'm giving you, you wouldn't know that this is happening. But because I choose to pay attention, I am able to participate in low risk, high reward opportunities like what is happening right now. So Ethereum, altcoin oscillator. Let's go ahead and move on. Let's look at Binance Coin. Let me just go ahead and turn off the algorithm. I'm not even talking about algorithms today. I'm just talking about human psychology being printed on a chart. I am going to open this up for comments and questions, but just go ahead and drop your questions in the chat, and I'll address them in a little bit. I'm just too excited about the frothiness of what is happening at the moment. So, Binance Coin. We've been talking about this thing since I started this stream. And when I started this stream, it wasn't even outside of this pattern, right? So I've just been saying, hey, this is what we're looking at, descending wedge, right? At some point, we will get very excited about this, okay? I added it to the list of assets that we look at every day. We had this breakout move, which we identified, not on stream, but I identified it slightly later, right? So we had been talking about this breakout move. I actually entered this trade right here. So for me, low risk, high reward If we get to target number 1, that'll be 1.38 to 1 risk to reward. So no matter what, if we hit target 1, we pull 50% off the table. And if we go back to our stop loss, we still make money on the play. Right now, all we've done is gone slightly above our entry point. But again, we've put in another higher low. So we have low, higher low, higher low, higher low. And one could even call these two lows on the bottom a a double bottom. So let's just go ahead and put our double bottom arc here. Just take 1, 2, boop, 1 and 2. Okay, so we could say this is kind of a double bottom, which is honestly even better. It puts an added level of confirmation that this is the current market bottom. And there's no reason for this sentiment to change because the sentiment just changed bullish within the last 2 to 3 days. So high net worth individuals, composite operators, market makers see the same thing that I'm looking at right here, and they choose to take opportunistic plays in these areas, right? Anybody who is buying on this green candle right here, this is a retail investor 100%. This is somebody who saw Binance coin go up 100% and they're like, wow, I'm going to buy it. It's up 100%. It can never go down. That is not the right way to look at these things, people. The right way to look at these things is where is a low risk, high reward area of opportunity. For me, it is not up here at this double top. It is down here at the breakout of a descending wedge with a retest and a double bottom. This is the areas that I look for, I dream of, right? Now, Binance coin is breaking out. That's great. But let's go ahead and move on to XRP, which is TA respected 100%. And I saved some of my technical analysis to do live on stream with you guys. So where to start? Where to start? Do we start with the breakout for this bit of education? Yes, the breakout and measuring the targets is very important, and you must understand that. But what we need to start with is a lot further back in time, right? What we need to start with is the fact that how do we recognize where to draw these trend lines? And as you can see, all this trade is made up of currently is three, the descending channel. So the top trend line, the heart line, and the bottom line. That is the only thing drawn on this chart led into making the decision to take a high reward, low risk trade. But that wouldn't have been possible unless we had a gigantic capitulation on October 10th, and then we saw technical analysis being respected and forming this trend to the downside. So without this channel being printed from humans making interactions with XRP, the asset, without this, we could not have made this trade happen right here. We could not have identified the opportunity, measured the targets, and taken action upon it. So what I would like to put out there is taking a step back, because I have seen a trend over the last 8 years doing this algorithm technology business where it drives me absolutely insane that my retail customers will dive in head first when Bitcoin is at 126,000, but they are nowhere to be found when Bitcoin is at 83,000. It flabbergasts me, because that's just not how my mind works. I'm looking for my favorite asset to be on a 35% sale before I go buy a year's worth, right? Wouldn't that make sense? You go to Costco and you see something on sale for 35% and you're like, heck, I don't see this thing on sale very often. I'm going to go buy some now for the rest of the year. Where is the mentality like that in finance? The world would be a different place. The little guy would have so much more if that was the case. And I'm going to show you exactly why TA is being respected right now. It is human psychology. All I can say, smart money is playing this move right here, right where I've identified on stream, and dumb money is putting money in up here. That's just how it is, people. Dumb money is seeing XRP at $3.50 and they want it to go to $10. They want it to go to $100. Little do they know, XRP was stuck at 50 cents for like 3 years. And we all had to sit there waiting for an opportunity like the one I'm showing you right now. And I hope I'm not being too intense, but it really is an important message to convey. So let's just talk about the actual technical analysis and what we're seeing, because as of about 32 minutes ago, we have now validated our second technical analysis play, and I will be entering this as soon as this stream is done. So let me just show you how we're going to do this. Target number 1 got absolutely smashed on our breakout move, which I've been explaining and predicted absolutely perfectly with our predictive circles here, our predictive breakout circles. So we entered upon daily candle close yesterday. What has happened since yesterday? We entered upon daily candle close and the price went immediately to our first target. We took 50% of the trade off the table with a risk to reward ratio of 1.77 to 1. What that means is even if XRP doesn't quite reach our second target, which it's so close, even if it doesn't do that and goes back down to our stop loss, we're going to make money. That's why it's so important. 50% of the trade comes off the table at target number 1. I don't care who you are. It must be at least 50% to do proper technical analysis. People can debate me on that. There's definitely other methods out there, but this is my method and it works. Okay, let's look at what is now happening. So now that we're going to make money no matter what on this play, where are we? XRP, especially in the crypto space, I mean, XRP has a market cap of what? Let me look here real quick. I'll just tell you what the market cap of XRP is. Coin market cap. The market cap of XRP at the moment is $143 billion. Who do you think in their right mind or in their wallet has enough money to move the price of XRP from $1.94 all the way up to $2.45? Mind you, that is a 25% increase in a single day. Who has money to do that? The high net worth composite operators and market makers. Those are the only people that can recognize what is actually happening and decide to save their capital to play a move like this with the rest of the world. Do you think retail investors that ape in at the top at $3.50 are around any longer? No, they have gotten absolutely destroyed and they are gone. But they are not looking at what we're looking at the moment, right? None of the retail investors, maybe some, but none of the retail investors that got in at $3.50 even have XRP anymore because they're like, this asset sucks. But little do they know, this asset does not suck. It is just going through a normal psychological, it's going through a normal human psychological swing, or, you know, this happens in markets, right? So we have absolutely had TA respected 100%, and we identified the opportunity here on stream. You didn't have to listen to me to understand that what I'm saying works 70% of the time, every time, right? Doesn't work 100% of the time, as we saw on Bitcoin with the bear flag getting completely rejected, but it worked on XRP today very, very well, and it only took a day. Look, I measured target number 2 taking until January 26th. Nope, we're probably going to hit target number 2 any minute now. Okay? So, oh, we got a trade coming in. Let's see what we got here. Yeah, no, this is probably a good place to just hang out and just let that soak in for a minute. We're going to move over to a futures trade that's going through and just see what's happening here. So, yeah, let all that sink in and we'll come right back to it, because the crypto stuff that I'm talking about is on a long-term basis. Even though we've been talking about it for weeks leading into this breakout, it's going to keep going on for weeks, potentially, right? So, you know, now we're looking at some day trading, and let all that, what I just said about smart money and dumb money, sink in, because we're going to talk a little bit more about it. And I'm going to measure those targets with you on XRP in just a few minutes. The new targets. Oh, by the way, the descending broadening formation with the daily candle close that I was just talking about has targets all the way up to like $4. And we're going to measure those together on stream, but you got to stick around. All right, day trade. What are we doing here? This algorithm has been having a tough few days. I'm not really happy with it. It's probably going to have to go back to the drawing board. This thing had a max equity drawdown of about 1,600 when I started it in a prop account, and now it has had a max equity drawdown of 3,500. So that's not really moving in the right direction. Although with the account type that I'm using on Apex, I have $6,500 of drawdown. So we could just take a look at that real quick. Oh, concurrent tab warning. Yep, to be expected. All right, bada bing, bada boom. Let's go Apex. All right, logged in. Which account is that? Hold on a second here. That's going to be account number 92. Okay, very good. So what we're looking at here on our day trade, I've been working on this algorithm for 6 months, something like that. First off, when I say working on an algorithm, what I mean is, does the settings in the script align with the outcome I'm trying to achieve? So in this case, Algo Pro Evo X, I'm not sponsored by them or anything. I'm just using their tool in my toolbox. Algo Pro Evo X is designed for day trading. I didn't have a day trading designed algorithm at the time. All of my algorithms are designed for dollar cost averaging, position building, short-term swing trading, that kind of stuff. But down to the day, I was never really a day trader until about a year ago when I embarked on this absolute obsessive mission to make profitable trading algorithms that people can use in prop accounts because it lowers the barrier to entry for my business. Whoa, that's a lot. But let's talk about this algorithm right here. This algorithm had everything I needed, right? Short trades, long trades, different types of signal confluences, fear and greed, volume exhaustion, liquidity grab. I'm using stochastic and fear and greed in this one because that's where I've found some best results, and that's also how I've day traded in the past. So, you know, the fact that this algorithm has it, very cool. So I'm using stochastic. Basically, our overbought level is 44. So we have to be below 44 in order for this to launch a signal. We also have to have our oversold at 62. So it's a wide range that the stochastic can be in. If you're not familiar what stochastic is, happy to do an indicator review if you just drop a comment into our chat. Okay. Long story short, no pun intended. Basically what we're looking at here is we can filter by volume, we can filter by trend. So it has a lot of risk mitigation tactics that I like, right? Which has actually given me a lot of ideas for my own scripts for day trading, which is all of our MGC algorithms are absolutely crushing it right now with daily returns of like anywhere from 100 all the way up to like 1,500, 2,000 on a consistent basis. Happy to talk with you guys about that. But yeah, this day trade at the moment, I have it on the 9-minute chart. So how I've been editing this outlook on the market is it's on the 9-minute chart. And instead of using a traditional take profit and stop loss, I was not finding success with that whatsoever. I'm sure it's something to do with the session that I like to trade, which is right at the beginning of each new trading day around 6 p.m. to midnight. That's the session I like to trade. I just wasn't finding good results using take profit and stop loss like that. So what I've done is I've moved on to this trailing stop loss feature, and basically I maxed it out. So basically what happens here is trail speed ticks per bar. So 400 ticks per bar is insane. The NQ is not going to make a 400 tick move in 9 minutes usually, right? Definitely seen it happen, but usually. So basically what I'm looking for here is this trade lasts for 9 minutes at a minimum, right? There's no take profit. There's no stop loss. We're basically doing like a, what do you call that? Like a binary option, if you will, where we're just betting on if the trade's going to go in our direction over the course of 9 minutes, right? But I, have never looked at day trading through that kind of a lens. However, I found on the, performance chart here that, holy crap, we're producing an accurate and positive result. So I started trying it out, and it passed a couple of accounts, and I was happy with it. I knew, however, that at some point it's going to fail miserably. And it hasn't failed miserably, but it also hasn't done exactly what I want it to. And what I mean by that is, like I was saying, this max equity drawdown, when I first started using the algorithm live in prop accounts, was at 1600. And because of this most recent downturn over here, you can see our equity drawdown was 3,000 over the course of this very short period of time. And because of that, our drawdown is no longer suitable for accounts that are under about 100K. Actually, 100K accounts on Apex only have a drawdown of 3,000. Now we're bumping this thing up to a $150,000 account. That sucks because I am trying to pass the lower account sizes so that I can pass accounts quickly, build my buffer quickly, and multiply the number of contracts that I'm using quickly. So the fact that this algorithm is now no longer suitable for a 25K account with only a $1,500 profit target, the profit target is now, I have to use an account with a profit target of 9,000. So instead of trying to hit 1,500, very, very palatable number, right? Now I'm trying to hit 9,000, and that is not okay with me because, yeah, it's just further development, I suppose, or, the strategy works at some times and not at others. So Algo Pro, I love the strategy. I just think that it is inherently flawed in some ways. And also I've had some signal misfires. So it's cool, but my review on it so far is maybe like 7 out of 10. All right. So yeah, we're in this trade for another 58 seconds. Let's go ahead and talk about maybe one or two of the other versions. Yeah, this version has been having a really rough downward stretch of minus 9,300. So this third version is no longer suitable for prop accounts. Sorry, it lost. First version, still suitable, but it also has a max equity drawdown of almost 4,000. So now this no longer fits 100K accounts or less. So again, invalidating what I'm trying to accomplish with this particular algorithm. Excuse me, been a little under the weather, so just excuse me there. All right, so as we can see, this strategy has been having a tough time. We're only 13 seconds away from finishing this trade potentially. So if it's on the positive side, which 3, 2, 1, we are on the positive side. Let's see, it's about to take profit here. It should anyway. So now because of that trailing take profit, it basically moved our TP level down to almost break even, if not break even. And then at some point within about 30, so I have the bar magnifier feature on, so it's going to go every, minute or so. So in the next 30 seconds or so, we'll probably see this trade finish. And because we're finishing with a positive trade, it will just stop trading for the day. So really this strategy, you kind of need to smack it out of the park on the candle that it works on, which is the 9-minute candle. So if you smack a 9-minute candle out of the park, heck yeah, it's awesome. But other than that, like I said, 7 out of 10 on this algorithm, and I have programmed it for 6 months trying to lead up to this experience. Okay. We're taking a day trade together. We are currently in a day trade together. The Martian gun will go off at some point, but now we're going to go back to what's really important is the cool stuff going on in the crypto space. All right, back to XRP here. So XRP is dang near kissing target number 2, right? But what the cooler thing is, this was only the beginning of this move on XRP. This is only the beginning, people. The market oscillators have identified not only the play that's going on right now, but heck, we have a whole new play that I'm going to show you, okay? if you're not familiar with a descending broadening formation as a technical analyst, you need to get on this train. And I'm going to show you why. Okay? All right, there we go. That trade just finished, barely making a profit at all. So again, like this algo, 7 out of 10. It's been working okay, but it's not doing what I want necessarily. So yeah, says we had 192 profit. Let's take a look in the account. Yeah, looks like we made, let's see here. It says $1.90, so it's not even accurate in the strategy report, right? This algo, we'll come back to that. All right, XRP, the real meat and potatoes of today's episode. XRP. I have been accumulating this asset since it was 17 cents, and it was a very, very long period of time that it was at 50 cents, and I thought I was just throwing money into the abyss. I'm so glad I held on, and I'm going to show you why, because now XRP has the full backing of winning an SEC court case, setting a new precedent in the entire crypto space, and we have market participants that we never had before. Those market participants are mature. They understand technical analysis, and I'm going to show you the next move here that we're going to be looking at. All right, so this is really cool, this descending channel breakout and how fast it went to target number 1 and 2, but let me show you the real move that the market oscillators are looking for. So let's go up and do a long position, and what we're going to do is we're going to measure it in order. How you measure targets for a descending broadening formation. Target number 1 is always the size of the structure where it initially started. So as we can see right here, the size of the structure where it initially started is that. And then our stop loss for this particular one is going to be below our most recent swing low. So this right here is our most recent swing low, and you can see we are below that. Maybe that's not enough for this large of a play. Maybe we go a little bit more like that, but overall it's below that or at that. Now let me go ahead and use the control button, click to duplicate the target, and then where does target number 2 come from? Well, target number 2 can come from 2 places. It depends on the size and the maturity of the structure. It also depends on the run up to the structure. So in this case, we're going to measure target number 2 from this low point right here. The size of the pole, I like to call it. It's not a bull pole, bull flag bull pole, but it is a pole nonetheless. So we're going to go from the pole all the way up to where the structure started. Boom. And then after that, we're going to use the control button once again, and we're going to measure our third target from the size of the descending broadening structure from the breakout point to the very, very bottom of the lowest trend line. Now, the market oscillators are really, really tricky because they gave us a much higher target for target number 3 because of this crazy, disgusting move we saw on October 10th. I'm sorry. The 30% capitulation market-wide, 40% led to 50, 60% disasters market-wide. Well, you know what that did? Those sly bastards, they literally put our target so far down here at the breakout point that now we have all new all-time high and above fully set within our sights. So this is very interesting. I purposely chose not to measure these targets ahead of time so that we could do it on stream. Well, this is interesting. Okay, so our second target and our third target are the same. What the hell are we going to do about this? What we're going to do about this is we're going to acknowledge that we have 2 separate instances pointing to XRP being $4 in the future. We have the size of the pole and we have the size of the structure. And now we're literally 2 separate factors are pointing at XRP being $4 by June this year, let's say. That's some really good information, wouldn't you say? Wouldn't you say market oscillators and market makers are absolutely looking for $4 on XRP at some point? That's interesting. So let's go ahead and just say target number 2 is going to be this one, and we're going to measure it in two different ways. We could measure it at our most recent all-time high. That's probably a little too gumptious. I would say we take it back even further because that's also very close to target number 3 and very far away from target number 2. Let's go to our next recent high. Okay, that's a little more stair-step-ish, right? That's a little more even. We could even take it a little bit down here, and we could measure, let's say, a fourth target in this instance, right? Where we just simply move this aside and duplicate it. I'm going to go with the general parameters of 3 targets, and I'm going to go with this high right here. This analysis just came out of my head on this stream right now, okay? So we have a stair-step 3-target pattern. Now, how are we going to measure when we think this trade will play out by, right? As you can see here, we measured very accurately that the trade ended up coming to stop out at break even, but look how close it was to our predicted of when this trade would come to fruition, right? Very close. And just to bounce around for a second, but let's look at Solana. This hit the trade plan exactly to the day. So it's very important not only to predict where it's going, but when it's going there, okay? So let's go ahead and predict when it's going there. You can put these targets on the chart, but if they were super skinny, you know, it might take you outside of your trade plan, right? But what I'm going to do is I'm going to show you just generally how I measure this. Let's go. No, it's in here. No, it's in here. Okay, yeah. Date range. How do we measure this? The length of the structure from the day it started forming. So length of the structure to breakout. Boom. Let's go from breakout. Yep, from breakout to the end. So this puts our target number 3 over here in, well, it doesn't even go that far. So the chart goes to June, but it does not go to July. So basically end of June, beginning of July, that's when we're talking here. Okay? Now, this has to be one of the most exciting days I've seen in a long time because this does not happen that often, right? And being here to recognize the opportunity when it does happen, that's what makes you a technical analyst. None of the fluff, none of the I've been accumulating for years and I've made a gain, right? Not the I have a 401k plan and I let others do things for me. This is for the true technical analyst and how we size up trades and measure risk. All right, that's enough about XRP. We measured it on stream. We have targets at $2.75, $3.36, and now $4. I will be entering this trade immediately after stream. So even though target number 1 and 2 were achieved on our descending channel breakout, now I have daily candle close confirmation here for our descending broadening formation. And I will be taking a very hefty chunk of what I sold around $3.50 earlier this year. I was selling in this at target number 2. I sold a very large portion of my XRP position because I knew in my heart of hearts that a kind of run like we had, $3.50 after accumulating since 17 cents was good enough for me. But it's not good enough anymore. I want it back. So I'm going in right here upon this daily candle close. I have my high reward, low risk trade set up. Actually, target number 1, I'm going to have to scooch up just a little there so that it's 1-to-1. This trade, we need it to hit target number 1 to break even if it comes back down to stop loss, right? So in order to hit target number 1 at $2.78, that's what, I'll be taking a large chunk that I sold at $3.50 and re-entering it right here. I didn't re-enter it on this one. That's not the main pattern I was looking for. The main pattern I'm looking for is this larger descending structure that gives us targets up to $4. So for me, looking at XRP at $2.34 right now, that's almost 100% gain. That's an 80% gain plus from here to there. And that's what I'm looking at. Okay, TA respected on XRP. Very good. New targets. Beautiful. Let's talk about Solana. Again, TA being respected. We had a downward descending channel. We had a change of heart, a change of sentiment in the market overall, a breakout of our descending trend line, and now we are about halfway marching towards target number 1. Target number 1 has a risk to reward of 1.54 to 1, so no matter what, if we hit target 1, come back down to stop loss, we'll still make money on this technical analysis play. Targets number 2 and 3, let's see, target 1, 151, target number 2, 183, target number 3, 223. Tron, very, very cool, just entered this play yesterday, so we got this one's a little different, okay? I would say this is a solid daily candle close above our trend line. But Tron is my absolute favorite altcoin to buy, hold, and accumulate because this thing has done 100% successful trades and has done over 1,200% in its lifetime since 2017. We saw a breakout. We're kind of seeing a retest. We don't have, we haven't had the full conviction on starting this move. However, I have entered. This is a low risk, high reward trade setup that I'm willing to take a shot on as a technical analysis style of trade. Let's talk about gold. Okay, gold had a bit of a turnaround today, which was very nice. So, yeah, all of our gold algorithms for the future stuff were going long today. I think we had a couple of trades. That was it. They just hit their targets. Pack it up. See you today. See you tomorrow. Gold breaking out, still making higher lows. Higher low, hit target number 1. We already took 50% of our technical analysis trade off the table. No matter what, we will make money on this play, but looking for targets up to 4,700 and then 4,900 and then 5,400 eventually. And I have targets measured all the way out to April 2026. So I'd be pretty dang flabbergasted if we hit 5,400 an ounce by April 26, but anything's possible. I'm not really going to go into stocks today. Stocks had a great day, but I don't really care about that. What I'm going to talk about after this is MGC and the algorithm that has been passing prop accounts and that I designed personally and have been designing for about 3 or 4 months now after I had been using Algo Pro Evo X. And I saw some of the flaws and some of the strengths within that algorithm because it's designed for day trading. And I didn't have a whole lot of experience in day trading specific algorithms. Now, that's not entirely true because I've worked with MIT computer scientists building high-frequency trading algorithms with co-located servers at the exchange that they're co-located at. So that is a completely different beast than your retail day trading algorithm. So now I've decided I'm going to take my expertise and I'm going to give a shot at these prop firms because that's the new up and coming thing. It lowers the barrier to entry for our clients and for our customers. I'm just going to tackle this problem. This problem has been a tough nut to crack and it's taken about a year now. So I'm glad that I've gone on this adventure. Persistence, as anything in trading, has been the key to success here. And now we're finding some very great success across the board doing something super simple. It's way easier than the Algo Pro algorithm, right? Anybody could do this. A monkey could follow this. So let me just show you here. What it's really been about is just selecting a solid methodology for entry and then designing the proper risk parameters for exiting the trade. Because there's 2 things that you need to do when designing an algorithm. There's only 2 things that you can do. You can only buy and you can only sell. Well, geez, that sounds easy, doesn't it? No. There are so many different ways you can buy and there are so many different ways you can sell and there's ways you can invent to buy and sell that have never been done before. I mean, most of it's probably been done if you're just starting out. Any idea you have is somebody's definitely thought of before, but combining some of the risk parameters and how you decide to interpret the price action, there are infinite ways to do that. And it's all based off of human psychology. Where did the path start versus where is it today? I could tell you. The path started with, I'm going to trade high frequency. I'm going to trade every minute all day long, and I'm going to make $1 million. Well, yes, that's the case for, like our HFT partners we worked with in the past when I was working with the MIT guys, and we did super smart stuff, but we had an advantage over people because we were nanoseconds away from the source of the data. And also nanoseconds away from not only the source of the data, but where we're placing the trade. And on top of that, those guys did not pay fees. They didn't pay trading fees. Oh. They didn't pay $1 for every contract. Heck no, they were able to scrape minute differences in price thousands of times, hundreds of thousands of times per second. We don't have that opportunity as small retail traders. That contract is long gone. It is over. They're killing it. And I want to just spread my knowledge, right? So what I've done is I've selected a very simple moving average bands strategy. All this does is it looks at this gray line right here. If the price is above this gray line, it's going to go long. If the price is below this gray line, it's going to go short. I've put a lot of different risk parameters in to where you can see yesterday, it just made one trade on this particular strategy, right? It started above the line, came down, got close, came down, went inside of our offset band, which is the same calculation as this. It's just 0.07 higher than that. So it went below our offset band and then went back above it. That initiated a long trade. So you can see we didn't trade a bunch of times in the day. No, we just traded once, right? With one contract. Super simple. But what is the simplicity about this is also the complexity. What I mean by that is because we're only trying to trade once per day successfully, well, when we figure that out, when we crack that nut, who's to say we can't do this with 10 contracts or 100 contracts or 1,000 contracts with the right party? I'm trying to simplify the very, very complicated, right? That's my mission at the moment. Make something simple that can be repeated and is successful over time simply by taking advantage of human psychology for a brief period of time. In this case, yesterday's trade went from 11:30 p.m. to 1:36 a.m. So about 2 hours we were in this trade. Now let's look at what happened the day before that. This algorithm will only trade one successful trade per day. It can have up to 5 losses, but if it has one successful trade, it's going to stop for the day. And what do I mean by the day? Well, the day could mean two different things. It could mean the trading session in its entirety from 6 p.m. to 5 p.m. the next day. So that'd be a full session. But in this instance, I'm talking about on a 24-hour clock. Right? So the day before yesterday, it hit a trade from about, 8 p.m. to 10 p.m. So another 2-hour trade. So 8 p.m. to 10 p.m. Well, the clock reset at midnight. So at 1 in the morning, it decided to take a second trade. Okay? Not limiting it to the session. I'm limiting it to the day. So very different way to interpret the price action. I have that built into the script where I can either do it per session or I can do it per day. So now that that's said, let me show you the script here, which again, I'm going to be giving away completely for free as soon as this script is complete enough to let people try it out. So if you want access to all of our TradingView scripts that I've been talking about this entire time, just drop your TradingView username into our Discord support, and I will make sure you get access to all of this grandfathered in forever for free. All I ask is that you please hit the like and the subscribe button on our YouTube channel. Right? That's all you have to pay for all of the industry grade technology that I have available in TradingView at the moment. That's it. You pay a subscribe. All right. So this algorithm, let's talk about it for a few minutes and then I'm done. I think I said everything I needed to say. Super exciting day. This is the day we dream of as technical analysts in the crypto space, at least, right? This information applies everywhere. It's more prominent in the stock market, but in the crypto space, you see it on the chart more, right? Okay, this one is a moving average bands strategy. So you have all your different moving averages programmed into the script. You have your moving average length. In this case, it's 40 on the 3-minute chart on gold. And then we have our band offset, which is 0.14%. So let me show you what this means. If I go to just 0.04, you're going to see that the bands get very thin. There's only 0.04% of space in between where your band offset is, right? But I have it set to 0.14 because that gives me the most accurate result. Long trades, short trades, take profit based off of risk to reward. So that's very cool. But what I also have in this script at the moment is using the risk to reward to enable our trailing stop loss. So down here, when this is toggled, enable trailing stop loss when TP is reached, what we're looking at here is just a tricky way of saying when our risk to reward of 0.9 gets hit. So we have a risk to reward 1 to 0.9. Typically, I wouldn't go less than 1 to 1, but it doesn't really matter on a day trading algorithm like this. It's not a technical analysis style of play in the sense that I talk about on the longer term. But yeah, so 0.9. So when that is achieved, it's going to arm our trailing stop loss, in which case I have standard deviation as the mathematical measurement. And then we have our standard deviation length of 5 and our multiplier of 2. This might all sound like a bunch of gibberish, but all it's saying is when it goes above this blue line, this is where we're going to enter, and this is where our trailing stop loss is going to happen. That's it. That's this whole strategy. It's super simple, right? And because of the simplicity, like I said, you can multiply that to 10 contracts, 100 contracts, 1,000 contracts, use it in whatever context, but the methodology is sound. Now what I also have here is our session manager, our avoid time sub window, right? So these are all just more risk measurements. We also have our martingale, which is going to multiply if we lose up to 10 contracts in this instance. That's just what's giving us the best result. We also have a trailing stop loss feature. We also have a daily P&L caps. These are all things I've learned through the last year of trying to do these retail algorithms that really make a difference. Is we're going to stop trading if we have a daily gain of more than $59. That doesn't sound like a lot, but hey, you win for the day, you're going to pack it up and I'll see you tomorrow, right? You don't have to deal with the rest of the entire day. If your trade takes an hour or two, That's it. You took an hour or two out of your day to go make some money, and it does it automatically for you. How's that sound? Sounds pretty magical, right? At least I think it is. We also have this streak guard, which is going to halt trading after a specific number of trades. In this instance, it's not set because the result we get with it set is not the same as the result we get with it off. And then besides that, we just have these equity performance dashboards, which you can see total, up in the corner here, total trades, win rate, profit factor, so on and so forth. And then the trade per session, today's, or yesterday's P&L was $134. That is completely accurate because that's what happened in our 25K accounts. And I have other like 250K accounts that are multiplying this algorithm times 5, right? So they made $700 in the day. Super straightforward, super easy to follow. If you want the early access to this, I'm going to be releasing this maybe this week, maybe next week. It's working absolutely beautiful on the futures accounts, and anyone who wants to learn, it's a great starting point to learn. Even if you don't automate it, you can put it on a lot of different charts and see the confluence that happens. Very cool stuff. That's it for today. I'm getting a analysis request on rarer than Bitcoin RTB to SOL. So let's go ahead and take a look. Pull up a brand new chart and let's see if it's on TradingView. RTBSOL. Yeah, here we go. Oh, wow. Okay. So yeah, we do have a chart. This coin is brand spanking new. I mean, really, there's not a whole lot of analysis to be done here, Jason. The only reason is this is not a long enough period of time to make any assertions or assessments on a technical analysis basis or standpoint. But I will say, this is on the 6-hour chart. Let's go down to like the 4-hour chart, or even the hour chart. Let's go down to the hour chart. Now, what I'm going to do is I'm going to try and plug in one of our other algorithms. So let's try and just plug in our gold accumulation algorithm. So this is kind of how you can use one of our configurations on a completely separate asset. Let's go ahead and see what happens when I plug it in. All right, beautiful. I already love it. Already love it. So let's go ahead and look at this, because this, as an accumulation standpoint, using our the same accumulation metrics that we use for gold, has already made several successful trades in the lifetime of this asset, netting a profit of 304% if you were to use this. So overall, I'd have to say the way to do analysis on this at the moment is you can see it's bullish, in the bullish control zone, and there's accumulation going on. And I believe the metric that we have for selling is take profit. So yeah, we have an ATR of 50. So if this goes above 50 on ATR, it's going to take 10% of your trade off the table. So you can see 1, 2, 3, 4, 5, 6, 7, 8, 10 entries, and then it had a nice run up, which was probably huge because this asset is very, very new. Let's just go average entries, probably like around there somewhere. So my God, this thing would have made on its own with no external assistance a trade of 245% in the early days of this asset. So you can see right now, it made another trade. Let's just say average price right there. Because this asset's so new, yep, that's going to be a 25% trade right there. So you've been accumulating. You took 10% off the table twice, but you're just consistently accumulating this asset. This looks good to me. I would absolutely run this. Now, need to say that this asset being so new could absolutely get rug pulled at some point. So that's your analysis right there. You're in it early days. This asset's already appreciated in value thousands of percents from day number one. 46,000%. So if you got in on day number one, great job. If you got in the last couple of months, great job, because you made tens of thousands of percents. I personally don't trade assets this small, this new, because the liquidity is not there to make either the size of trade that I need or the type of trade that I need. And I also need more than $1 million of daily volume, which we can look at here. I can't even read the volume at the moment. So yeah, personally for me, in order to put this into my setup, we need to have a minimum of $1 million of daily volume and some other coinciding factors. But yeah, that's your analysis right there. Thank you so much for the request. Happy to do requests. Happy to throw any of our algorithms on the requests that we make. I'm happy to do indicator and strategy reviews for things that are on TradingView. I have over 30,000 hours on TradingView, so any questions you have, I can probably give you a solid answer. All right, everyone. Again, this is sponsored by KillerWhaleVentures.com. Go ahead and check it out. Our code START25 will get you 25% off of your first month forever. So as many accounts as you want to set up with that code, START25 will get you 25% off for friends, family, whoever. That's going to be our main discount code that we run promotions through videos and things like that. So START25, KillerWhaleVentures.com.